Hello, fellow Rebel Capitals. Hope you're well. Got a lot to talk about. Consumer sentiment survey. The University of Michigan just came out today, and consumer sentiment plummets right off a cliff. It was bad last month, but it is really, really bad. And what's really significant is the difference between Democrats and Republicans. You may say, oh, well, it's just those stupid Democrats, and they're worried about the Trump tariffs creating inflation, but it's more so across the board now. We'll get to that in just a moment. And the market's way up today, but it's what you'd expect in a potential bear market. And which states would or likely will be hit hardest by tariffs, or which states might benefit the most from tariffs, whichever way you want to look at it. We're going to dive into that right now. All right, let's get into it, guys. First, shooting over to CNBC, then I might go over to the University of Michigan survey itself, but we'll start with CNBC. Consumer sentiment slumps. That's an understatement. Consumer sentiment slumps. Okay. I think they're downplaying it here in this title, which is pretty rare because I would have thought they really would have gone all out with the title because you can blame it on Trump and you know how the mainstream media is. So sentiment slumps in March to lowest since 2022 as Trump tariffs spark more inflation worries. Yeah, but it's not so much about the inflation worries. And with this survey, it wasn't so much about Democrats versus Republicans, like I was saying earlier. It's really about what's happening in the employment market. And oddly enough, you got to give credit where credit is due. This is what Snyder has been talking about like for the last 6 months as far as seeing weakness in the labor market. Although the headline numbers look really, really good, when you look beneath the surface, it ain't so hot. But key talking points, University of Michigan survey of consumers for March posted a reading of 57.9. Get this, a 10.5% decline from February and below the consensus for 63.2. Now, what's crazy, and this is why I want to go over to the Michigan survey itself, is if I am not mistaken, there was like a 10 or 12% decline in February from January. If that's the case, from January, we've got like a 20 or 25% decline in this survey. 1 year inflation outlook spiked to 4.9%, the highest reading since November 22. At the 5-year horizon, the outlook jumped to 3.9%, the highest since February of 1993. And this makes a lot of sense because everything that you're hearing in the mainstream media, because they're all or almost all very anti-Trump, is just how it's going to create inflation. It's going to create inflation. It's going to create inflation. Now, you guys know my view on this. I think it will increase some prices, and then it depends on how much he does tariffs or how much the tariffs are, right? If they're just 2.5%, well, it's not going to move the needle much. If they're 25%, okay, now we're talking. And then it also depends on the dollar. There's a lot of factors out there. These supply chains are incredibly, incredibly complex. So it's difficult to know what the knock-on effects are going to be when they're implemented, or if they're implemented, and to what degree. But let's just say that we do get some extreme ones, 25% or 200% on champagne or something like that. It is true that the price of that stuff will go up, but because we really don't have wages going up, the people are going to have to rob Peter to pay Paul. So if they want that stuff that's coming in from China that has a higher price, they're going to have to take away spending from something else. And you may say in the long run, and this may be a valid point, that, well, they're just going to take that spending and, with the prices that are going up with the stuff coming in from China, and they're just going to allocate it to all the stuff being made here in the United States. The champagne's a great example of that, because champagne, if I'm not mistaken, it only comes from a very specific region in France. And outside of that, I think you can't really call it champagne. It's just like white sparkling wine or something like that. You guys probably know better than I do. So that's a great example of something that if the price goes up by 200% because of a tariff, it's not like you can just buy American Dom Perignon or something like that. I don't know that they make Cristal in Michigan. So although they probably drink a lot of it there, or at least show a lot of it in the rap videos that are filmed in Michigan. But anyway, it's a good example there. You can't now in 10 years, they might make great champagne in the United States due to the Trump tariffs. I don't know, but they're not going to be able to make it in the next 6 months. So you're not going to have that option. So you just got to pay that higher price. And if you're someone that's at maybe a lower income group that's not buying champagne, but maybe buying something else at Target or Home Depot, again, you're going to have to pull that purchasing power away from something else. So although those prices go up, other prices come down, and it kind of, on net balance, it doesn't do much. While the measure is often prone to disparities between parties, survey officials said sentiment slumped across partisan lines along with virtually all demographics. Consumer sentiment took another hit in March as worries intensified over inflation, slumping stock market. I don't know why they don't point out the elephant in the room here, which is the labor market, for heaven's sakes. And then, of course, they've got to throw in, this is all about Trump. It's all about Trump. It's all about Trump. There you go. The big news in the University of Michigan data was not inflation expectations. I'm trying to read this here. Look at what people are saying about the jobs market. Expected change in unemployment worst since the 2008 recession. In other words, the GFC. No one is asking for a raise in this environment. So when you look at this survey, and this may be an outlier, who knows? We got to look at all the data and see what comes in over the next couple of weeks. But if this is any indication as to what's happening underneath the surface of the labor market, I mean, this says a lot. Going all the way back to 2008 is the last time it was actually this bad. And that goes with Democrats and Republicans. And that's what's really interesting. That's what's very different about this survey. So let's get back to CNBC, see if they got any more insights. Many consumers cited the high level of uncertainty around policy and other economic factors, frequent gyrations in economic policies, very difficult for consumers to plan for the future. Yeah, I mean, I have a hard time with this. I totally get it if you're an importer or you're a business or a bank or something like that, and that you're like, look, there's so much uncertainty. Or if you're an investor in the stock market and therefore you're trying to predict earnings and whatnot, this makes a lot of sense to me, that the frequent gyrations in economic policies, because let's be honest, you may love Trump and love tariffs and think it's the greatest thing since sliced bread, but you've got to admit that his approach is very, let's say, difficult to know. It's very haphazard. It's very kind of bull in a china shop. And therefore, you have to admit, it does create an immense amount of uncertainty. But my point is, does this really impact consumers? I highly doubt it. I mean, most of the normies I know that are just employees or own a small business or something like that. If I asked them, are you worried about tariffs? Or they probably don't even know what they are. And they probably like, tariffs? Yeah, I kind of heard about the news, but I don't understand what they are. So I would highly doubt many of them are making huge economic decisions based on what their Trump's economic policies. That I have a tough time buying that one. So expectations fell 10% for Republicans, 24% for Democrats, 12% for independents. Sentiment overall has fallen 22% since December. Oh, I got that one right. Well, it was pretty good math guessing on my end. I said between 20 and 25%. There you go, 22%. The inflation outlook contradicts reports earlier this week showing the consumer prices rose less. Also, too, the PPI. Let's go over that because I was going to touch on that yesterday. Right here, initial jobless claims pretty much on par with what was expected. Shoot, now we're on next week. I guess that's because the market is closed. This is really annoying. Let's see if I can pull up this week's report that they've already moved on from for some reason. No. Well, I know it right off the top of my head. Let's do this actually. Okay, so we also look at this. Actually, a negative on services for PPI, but I know the expectation was for an increase of 0.3%, and it was flat. It was flat. So a big miss there on the PPI. And like I said, the services component of it actually declined. So a decrease in prices for producer prices in terms of the services component of the overall number. So that's a big deal. That's a really big deal. And usually, if I'm not mistaken, this is kind of a leading indicator for the CPI. So I wanted to bring that up. And then let's get back to, actually now, guys, let's go to the Michigan survey. There we go. And here we go. So the change year over year is actually 27.1%. Current economic conditions down 23%. Consumer expectations down 30%. Jeez. And then the month over month for consumer expectations down 15.3%. And then the 10.5 in consumer sentiment that we were referencing earlier. Wow. Just really, really big declines.
Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow Rebel Capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount, because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.